What's going on, guys? Good morning. Welcome into another live stream here. Hope you guys are having a good morning and have had a good 2 trading days this past week. I am finally back from my holiday and I am ready to fire on all cylinders. It was a great time in Phuket, Thailand. Definitely miss the open seas and waters. Hope that you guys haven't really missed anything. We did have quite a considerable sell-off since the last live stream that I held. I did point you guys out to the right direction. Even when I was in Phuket, I left behind 2 lives on IG to kind of give you guys some direction. And now we are finally down into a range which we can, expect some interesting moves. So let's talk about a little bit between the macros and then get into the technicals right after. I want to talk about briefly the bond market, which is the important situation to be talking about right now. And once again, for all of you guys that are tuning in, wherever you are, good morning, good evening, and thank you guys for attending a live stream. If you are here, make sure that you smash the like button and leave a subscribe if this is your first time. We do this Monday, Wednesday, Friday, all for your benefit so that you can be aware of what is going on with the markets. So let's dive into it. So with the bond market here, TLT is one of the most important things that we want to talk about. Why is the bond market important? Because this is going to be, one of the most important factors to support equity valuation as well as liquidity. Credit is majority of the money in the world, and therefore you always have to track what is going on with the bond market in order to understand what is actually going to go or happen with equity markets. So we're looking at the bond market, for example, we're looking at TLT here, which is the proxy for the 20 plus years bonds up to 30 years. And we can see that bond prices have been falling pretty much parabolically through the past couple of sessions or past couple of weeks. This is the weekly chart, and it's very important to be aware of things like this because remember that the bond market, in terms of pricing, when bonds come down in terms of price, then the yield demanded goes up, right? Because investors start to realize that they want more yield or more return on their bonds for holding, especially longer duration bonds, which are more sensitive to interest rate changes. And now that the Fed has gone pedal to the metal in terms of equity markets, and now valuations are coming down. The reason for this is because bondholders are obviously looking at the fact that quantitative tightening is going to be more rampant and for a longer period of time, and for that reason, they've already priced in the fact that we're going to be going through some form of a economic recession in the next 1 year. Remember that the bond market is a good precursor for where the equity market is expecting some kind of a slowdown, okay? And here we pretty much can tell at this point that bondholders are expecting the economy to slow down in the next 6 to 8 months. The economy is not the stock market, and the stock market is not the economy. Always remember that. The stock market is the leading indicator of the economy, and therefore when the market is selling off or the bond market is selling off, we are pricing in future equity valuations and not the current equity valuations based on the current economy. This is very, very important things to note. So currently we are pricing in the fact that we will be going through a recession in the next 6 to 8 months, which is already pretty much underway, right? We had the first negative GDP print and we are likely to see more, right? So with that, on the macro standpoint, the bond market is finally finding some bounce here pre-market, instead of falling off completely like off the cliff and continuing to fall pre-market. We'll see if we can continue to hold this rally up, because that will be important in judging where equity prices are going to be. Okay, so now remember that we had our fair value estimates of S&P 500 at 3,600 to 3,750, and we have been talking about this for weeks on end on how this is the value at which we see the S&P 500 coming down to excuse me, before we find any support in valuations. Does this mean that we can't go lower? Absolutely not. If we wanted to go further down from here, then we would be finding the 32, 33 as the next support after we break further down from here. But however, I do feel like this is a strong level of support temporarily especially in this range between the 3389 or 3390 all the way up into the 3600s. So therefore, at any point in this range, we could actually see a short-term bounce to the upside, up into the 3700s before we see another wave down. That is a possibility, okay? Otherwise, then this is going to be one of the parts where we could potentially bottom out. Now, one of the reasons why I am also talking about this being a potential bounce level right here, heading into today and then sometime next week, is because there are a substantial amount of people who are bearish. First of all, put to call values are very, very elevated right now. It's a majority of people who have wanted to hedge are hedged, and also we are starting to see a complete washout in the breadth of the equity markets. Therefore, majority of the sectors within the equity markets are actually pretty washed out. Let's see, one way to look at this is to look at FinViz, right? And go into your chart, go into the 1 month performance of the exchange traded funds, and you'll see here that almost all of the sectors in the US sectors are all red, right? SOXS is the bearish ETF. So every single sector here, and if you look at the 1 week performance, you'll see the same thing here, except for one sector, which is what is this? The energy bear. So the bearish ETFs are the only ones that are green, which means every single thing is actually bearish. So we have a very washed out sector breadth, which means every single sector is now oversold or getting close to oversold, right? Really, really important. And then you have the VIX, which is elevated at around 30. Well, we got up to 34, 35 yesterday. And 30, as I mentioned before, 35.46 is a very key level because that's your upper alarm for possibility of panic, right? That means elevated levels of panic and increased levels of fear. Now we're starting to come back a little bit further down, and we'll see if we can hold 31.50 on the VIX for a further upside. That means we would get up to around $40 or even $41, let's just say, right? So those are important things. So with the VIX coming down, as well as the bond market bouncing together with a very, very crucial support here in the S&P 500, as well as the fair value estimate range support, it does seem to me from the macro standpoint and the technical standpoint that we are due for a very, very nice bounce, okay? Now, obviously, we can't time it. We can't time any bounces in the market perfectly, okay? What we can do, though, is to take interim positions and take them for further out expiries, adding along the way when we see confirmations. And so, therefore, if you want to take a small position and add a bullish position right here, let's say, for example, at the market open, that wouldn't be a bad idea. And then you can add more to your position above 37.24 or so, which is the key level on SPX for a roll reversal to the upside. That would be your bullish pivot, right? And if we look at the futures, it's a similar case here. We are looking for above 37.35 or let's just call it 37.40 for that reversal out of this downtrend. So a sharp sell-off here, and then a couple of bases. So breakout and then a base, and breakout and a base would be nice to see on like a 1 hour time frame. That's what you have to keep your eyes on here, heading into this trading session, heading into this next week. As we are kind of finding some footing. Now, as everybody starts to get increasingly bearish, remember that yesterday we broke down a key level here on the SPX. We broke below the 36.37 level, which was the previous lows of June. And everybody was blaring the alarms yesterday, but this break happened on very low volume, okay? It happened on very low volume, especially in the 4 hour or the daily, right? And when breaks happen on low volume, it's probably unlikely that it will sustain. Another thing that you also need to note is we are now 25% down from the highs of the SPX from 4,800, down now to 3,600 or so. The COVID drop was 35%. It was a 35% drop from those highs, but this was a black swan event. This is more of a recession, post-COVID kind of situation, right? So these kind kind of nifty facts are kind of good to have at the back of your head. But this does look like a very nice level for us to take some upside exposure and then add more if SPX really falls further down. The next level that we could see it really get a bounce at is around 34.50 or so. Yep, 34.40 or 34.50. And then below that, if we really do keep tumbling, it's going to be 32.39 or 32.40 pretty much. This is a dual zone from the COVID lows, right? So keep your mind and your your bias kind of open. I like the upside exposure here. I've really gone ahead to take some upside exposure on my main account. For those of you that want to see what it was, took some 3,700 SPX calls for 10.7, mainly as a hedge and upside play. And I got those for about $5,000 a contract. Got about 4 of them. So I'm playing about a $20,000 position on that main account, and I will be taking some upside on the small account as well. Likely going to be taking some $400 calls or $380 calls on SPY to play some of the upside move when we get that bounce. Okay, so with SPY, obviously it's a little bit of a different looking chart because of the gaps, but very, very similar, right? So on SPY, that would pretty much be a retest of around 378, but first we have to get over 371 or 370.5 pretty much, and that would set up the events for the next leg up. Okay, and we are really looking for a bounce to get up above 371, and then after that 378 for that bounce, and then ultimately at 390. That would really be a nice little wave to the upside, and that would be the best case scenario, obviously, right? So that's a few things that you need to take note of. Obviously, if you have questions, post them in the comments right now. And once again, thank you for attending the live stream. Smash that like button if you can. It really helps the algorithm on YouTube, so this video can help other people and reach other people. And yeah, on the IG live, I also mentioned something about financials, and I was telling you guys to look at financials because as the bond market continues to sell off here, we are likely to see some of the financials improve in valuations in the next 1 to 2 weeks. Remember that one of the best ways to know when equities are about to resume their rally is to look at the bond market. Sorry, not just bond market, financials. And the breadth on the financials have been pretty nice so far in terms of the sell-off here, giving us a better valuation for many of these choices. So look for those bounces on financials as one of the precursors for the rally, as well as semiconductors. And the market just opened right now, so let's just continue on here because I'm going to be done in exactly 1 to 2 minutes. As I was saying about semiconductors, we need a nice clean bounce of SMH at the 190 level for this upside, and once we get that, then we can take some upside pressure on the NASDAQ, QQQ, as well as the SPX. So that's all I have for you guys in terms of macro. In terms of individual stocks, if you want me to break down specific stocks, go ahead. Post it in the comments, and what I'll do is I will cover it. So I'll give you guys about a minute or two. Post any of your tickers that you want me to cover, and I'll go ahead and do it right now, right before I jump on Discord and trade live with the team. I'm going to wait like 1 or 2 minutes for you guys. In the meantime, I'll see what's moving here on the market open. Nvidia does look nice here for a retest of the upside at 126, 127, if we can get that, by the way. Meta, okay. Meta, so this one has pretty much broken all the way through into the demand zone. Now, I don't want to take any downside on this right now because the downside is quite limited from 137.75 all the way to 125 or so. What I would like to see is a nice bounce here, potentially a bounce around 138. Yeah, actually not 138. Let's just say 140. A break above 140 would give us the directional move that we need, and a retest of 140 before that upside. Then you can play the 154 retest. So you want to play the 138 bounce rather than trying to catch this falling knife right now with Meta. That's what I would do personally. Wait till you get that. Okay. Let's have a look, see what's going on with SPX here at the market open. So we're likely to see, Powell speaks again today, by the way, I believe. We're likely to see some chop here and then some basing. If we can hold above 37.60, 36.60, and continue holding above it, that would be a great sign for us to move back up into 37s. That would be really good. Tesla, okay. Let's do it. So Tesla still in the range, but has this now new kind of low here. Let's see here. Let me get this extended out a little bit. So this is a little bit of a tough position to play Tesla. Right now, this looks like a bear flag, right? It looks like a bear flag. So this is pretty much a bear flag at this point. However, things could change. Let me get this pen down. What you want to do here is be really careful with Tesla. So you have the bear flag. You want to have a break below 277.61 for the downside move. And then you want to break above 288 for the upside move. Actually, I take the upside move back a bit higher. 291.50 for the upside move. The range is going to be 277.60 and 291.50. A break above 291.50 and then a hold above there sees the upside back into the upper range of 310 to 315. Break below 277 and a hold below 277. That sends it down further to retest 265. That should be the game plan here with Tesla. That's how I would play it personally. Right now, it's a chop zone. So I would wait for either one of the pivots to break, and that's just simply how I would play it. One of the stocks that I'm watching that I would like to trade is Snow, S-N-O-W. However, this topping out pattern here with the double top could be a potential reversal after this multiple wave combo that has been moving to the upside. So therefore, I'm looking for a break below around, let's see, what is this level here? 164.50 to take rejection off the 164.50. So break below, retest, rejection, and then play downside back into 150 pretty much. That's what I'm looking at for Snow here. All right, well, I see no more questions. I hope that you guys learned something or gained some insight, and I hope that you guys have a great trading day. I'm gonna jump onto the Discord and trade live with the team right now. And remember, if you want to join the Discord, you're going to be a part of our tribe. Link is in the description below, and we'll see you on the trading floor. If not, I will see you guys on Friday for another live trading pre-market or the pre-market session. And we'll be back on YouTube. So see you guys here, and peace out. Love you all. Thank you for attending once again. Smash that like button on your way out, and I'll see you on Friday.